Maybe you have been priced out of the housing market in 2022, or maybe you were just afraid of how much things have changed within the last year. The interest rates are continually rising from one day to the next, and you are wondering if 2023 is your year. In this video, I am going to share with you a few things that you can do right now to help you to make your dream of home ownership a reality in 2023. So before I jump into this, again, my name is Josett. I'm a local real estate agent right here in Tampa, Florida, and I delight in turning renters into homeowners. If you have not yet subscribed to this channel, go ahead and do that. Hit the notification bell so that you can be one of the first people to know every time I upload a new video. Let's dive right into this. Alrighty, so let's do this. The first thing that you want to do to prepare yourself to become a homeowner is, number one, you need to decide whether or not you are ready to buy a house. Because only you can decide if it's time for you. Only you can decide if it's a good time, no matter what anybody else is saying. So don't be bullied or tricked into doing anything that you are not yet ready to do. Once you have determined that you're ready, then your first step is to talk to a mortgage lender. Yes, as a realtor, we tend to want to say your first step is to talk to a realtor. But I think it is more important for you to talk to a lender than it is to talk to a realtor first, okay? If you are just rolling around with the idea in your head and you're trying to decide whether or not you have what it takes to become a homeowner, I think your best bet would be to talk to a lender first, because they will be able to give you a better understanding on what it really takes to get you mortgage ready. We are real estate agents. We are not mortgage lenders. So we cannot tell you it's going to do this, it's going to take this, this, and that, because it depends on the lender that you're going with. So you want to talk to at least 3 lenders so you can compare products, you can compare rates, and you can see what works best for you. So your first step after deciding whether or not you want to become a homeowner is to talk to a mortgage lender. Now, you might even ask me further, well, why should I not talk to a realtor first? You can talk to a realtor first, but talking to a mortgage professional is going to help you to determine whether or not you are truly ready. They're going to get you mortgage ready. The main job of a realtor or a real estate agent is really to help you to find a house. They don't qualify you unless they are mortgage lenders themselves. They don't really qualify you to become a homeowner. They help you find a house after you become mortgage qualified, right? So it's important to start there. By having that conversation with a lender, you will be able to get your lender's input on what you need to do so that you can afford the kind of house that you want, because it takes different things for different people, right? Or we say different strokes for different people. So your lender will give you a better idea of what is going to take you to get you to the kind of house that you want. You may find out that you might probably need a little bit more income, right? Or you might find out there are some negative things on your credit report that you need to dispute, right? Or you might find out that you've not been in your job or on your job long enough to be able to qualify for a mortgage, right? So you can't find that out if you are not talking to a mortgage lender. So when working with a lender, they'll give you a better understanding of what else you need to budget for. You know, we know that one of the main things that first-time home buyers or buyers in general, One of the main things that really stop them is that down payment, right? If you talk to a lender, you will have a better understanding of how much you need to budget for based on the programs that you are qualified for. So it might take a little less, it might take a little bit more. You might be closer than you think, or you might be further than you think, but you won't know that until you talk with a mortgage lender. Talking to a mortgage lender will help you to manage your expectations as well. It'll be able to help you set realistic goals. When your lender is putting that on paper and you're seeing it, now you're able to set a realistic goal of what you need to do to become a homeowner. So your first step after deciding that you want to become a homeowner, talk to a mortgage lender. And again, talk to more than one, okay? Talk to more than one so you can make a comparison between them. The other reason why you want to also talk to a lender first is because owning a home or purchasing a home comes with other expenses, right? Not just your down payment. You might need to save for your down payment, but not just your down payment, because there are additional costs and fees that comes with purchasing a home and becoming a homeowner. So you want to talk to a mortgage lender so you know what this cost and these fees are that you will be responsible for paying. There are lender fees, there are title fees, there's appraisal, there is inspection. So you do want to make sure that you're not just saving for the down payment, but that you are budgeting for the additional fees that are attached to owning or purchasing a home. Now, when you talk to a mortgage lender, you are going to decide which program, what loan program works best for you. The lender is going to give you different scenarios. If you're qualified for different programs, they're going to show you all of these, but you are the one that's going to decide which one works best for you. Why? Because only you know your pocketbook, right? The lender, when they're looking at your income, they're looking at your gross income. They're not looking at your net income. Only you know how much money you actually have coming in your house and how much you have going out. Only you know, even if the lender say, hey, you're qualified for a $450,000 home, but you know, at this time, you're not ready to make a $450,000 mortgage payment, right? You're not ready for that. You want something lower. So you are going to decide which one of these programs work best for you. So before you can apply for a mortgage, you will need to decide what the best type of loan is for you and which ones you will qualify for. Again, we have the conventional loans, we have the FHA loans, VA loans, and we have USDA loans, which is the rural loans, right? It's another government loan, and this USDA loan is a loan that helps you to buy a property in a rural or suburban area, and it is 100% loan. So if you apply for a USDA loan and you qualify for a USDA loan, you get 100% of that loan. Now, a conventional loan, I mentioned, so let me just go back a little bit and explain to you what they are so you get a better understanding. A conventional loan is a mortgage is made by a private lender and it is not backed by the government. And we have the FHA loan, which is a loan that is backed by the government. And this loan makes it a little bit easier for people to become first-time homeowners or home buyers because you can put as little as 3.5% down, and the credit score requirements is a little bit less. Have 580 and above. VA loan speaks for itself. Veterans, and again, USDA, I told you, is United States Agricultural Loan, right? So that's what it is. So only you can decide which one of these works best for you. And you can only find that out when you talk to a lender and you decide, you weigh all these things against your income, and then you decide which one is best for you. So number one, you've decided you want to buy a house. Number one, you start talking to a lender. Number two, after you have spoken to the lender, he's gonna or she is gonna tell you all the things that you need. And like we mentioned before, the down payment. You want to start saving. You want to start saving for your down payment, your closing costs, and any other fees that are attached with becoming a homeowner. You want to make sure that you are saving for that. Your down payment is the largest thing that you probably will save for, because it is anywhere from 3.5% if it's FHA, upwards to 20% if it's conventional. Again, if you are doing VA or USDA, you don't really have a down payment because they are 100% loans. The other thing that you'd be saving for is, again, I said the closing cost. For example, if you are, and I hope I'm doing my math right, if you are buying a house for $200,000, you might pay anywhere between $6,000 to $12,000 in closing costs. It differentiates different fees, different companies. So just know that you will be paying closing costs as well. Even if your loan is 100%, you still pay closing costs. So these are some of the things that you will need to budget for. These are some of the things that you'll need to start to save for: your down payment, your closing costs, your inspections, your appraisals. These are things you're gonna need to start saving for in order to become a homeowner. Spoken to a mortgage lender and you start saving and doing all of that, then you want to hire a real estate agent. Yes, I really recommend that you do work with a real estate agent, because they really can help you to just navigate the waters of home ownership. They can help you navigate the waters on what to look for in a house. They'll help you with searching for homes. They'll help you with putting an offer on the house. They'll help you to negotiate with the seller. They will help you to connect with other people in different industries. Like they will give you insurance companies, they'll give you title and escrow, home inspectors, pest control, all of that. They'll have a list of vendors that they can refer you to. So you do want to not go at this alone. You kind of want to make sure that you are hiring a real estate agent. And again, talk to more than one. Just like I encourage you to talk to more than one lender, I'm going to encourage you to talk to more than one real estate agent, because they really are there to help you. And who you hire really matters, right? Because when you get a great lender paired up with a great real estate agent, your process becomes so much more easier than if you're working with people that you don't connect with, you don't mesh with, they don't understand the process. It just becomes a whole issue. So you do want to do that. These are some of the things that you can do to help you to become a homeowner in 2023. So once you have your pre-approval in hand, figure out how much you can truly afford. You saved for your down payment, and now you've hired your realtor. You are now ready to start your home search. I recommend that you go through all of these processes before you start looking for houses. And that's, I'm not gonna go down into the rest, and I'll probably make another video on that, but I wanna get you from thinking to getting ready to hiring that realtor. Because once you hire that realtor or that real estate agent, then they will lead you to the rest of the program. right? The process. They'll lead you through the rest of this process. So remember that the home ownership journey is different for everyone. So do not compare your journey with others. Listen to your lender, listen to your real estate agent, ask lots and lots and lots and lots and lots of questions, and follow the steps. Follow the steps. If you follow the steps, I promise you will get there. I wanted to give you a bonus point. If you are thinking of utilizing down payment assistance programs, once you decide that you want to buy a house, I would recommend that you start looking into the programs at the same time, because most of these programs come with specific lenders, and it would be easier to work with these lenders than to work with another lender if you're using a certain program. So they would have to mesh. So you do your research. Make sure you do a lot of research. Do your research and decide which route you want to go. And once you've decided on the route that you want to go, then you decide from there. Okay, I'm going, let's say I'm in Tampa and we use City of Tampa Day program, for example. They have specific lenders, they have specific realtors. So if you're going to use that program, it would be better to start there than to go out and figure things on your own and then come back. Because once you get on the contract, you can't come in and say, hey, I found a house, now I want down payment assistance. It doesn't work like that. You kind of have to go through the steps. So I hope this helped, guys. Follow the steps so that you can become a homeowner in 2023. It is totally possible, no matter what the interest rate is doing, no matter what the market is doing. People are buying and selling houses through it all. So whether the market's high or low, there are still people becoming homeowners every single day. And that can be you, my friend. See you in the next one. Bye.